Although the week is coming to an end, volatility is likely to be high on a Friday. The focus shifts to the United States, which will issue inflation figures. Notably, the Fed Reserve prefers a cautious approach to the key rate cut. The Fed's officials have already provided numerous comments about this issue. For example, this week, U.S. Fed Reserve Governor Bowman has said that inflation is likely to remain high for some time. That's why it's not reasonable to start lowering the benchmark rate. Curiously, Canada, Switzerland, and the eurozone have already cut their benchmark rates. Nevertheless, the US dollar is still gaining in value, and the fact is that a decline in the currencies of these countries boosted the US dollar index. Thus, yesterday the index advanced to a two-month high and opened today's trading with a rise. You can learn about the currency market situation in our video reviews that are published ahead of the US trade. Now, let us find out what macroeconomic reports will shape traders' sentiment on June 28. You are watching Traders Calendar. The flow of macroeconomic events will start with the release of a consumer price data in Japan. This report is important for the country's central bank. However, the inflation situation appears somewhat confusing. Although the weak yen puts considerable pressure on households within the country, such a situation is beneficial for Japanese businesses abroad. On the other hand, Tokyo is hoping for wage growth that is likely to support the population. However, this may also fuel inflation. The Bank of Japan expects inflation to fall to 2% in order to raise the interest rate, but May's price growth forecast is set at 2.4%. If the predictions come true, the yen may gain in value. However, the Japanese currency may become more resilient after the publication of the industrial production report. Following last year's negative figure, forecasts suggest almost a 2% rise. So, the yen will have some support on its confrontation with the US dollar at the start of a Friday. A shift from a negative to positive is also expected in the UK GDP report. It's anticipated that the indicator will show the strongest growth in the last 2 years. Thus, the country's economy may recover from last year's recession. This growth will boost the British pound, allowing it to challenge the dollar in its currency basket. On this day, Italy, Spain and France will also release their inflation figures. The annual inflation rate in France is expected to climb to 2.5%, which will consequently lift the euro. However, the market might ignore this data since the French economy is becoming hostage to politics and national debt. It's more important to understand whether France's position in the EU will remain stable or whether chaos will ensue. In other words, whether President Macron will maintain his leadership or whether the far right or far left will come to power. Both of them intend to adjust France's interactions with the EU. Such adjustments will surely lead to a decline in the euro. Furthermore, during the US session, a series of US economic reports will be released. Some forecasts for these indicators are mainly in favor of the greenback's growth. For example, the personal consumption expenditures price index is expected to rise to 0.4% from 0.3%. Additionally, personal income may also rise. Considering the slowdown in wage growth, the indicator is expected to inch up by 0.1%. However, even such a small increase will act as a good driver for the US dollar appreciation. The closest attention should be paid to the core component of the consumer price index. This indicator is key for the Fed Reserve in its plans to lower the interest rate. A slowdown in the indicator's growth to 2.7% from 2.8% will be considered a clear dovish signal for the US regulator. Meanwhile, lower prices will mean the beginning of the greenback's sell-off. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading. See you soon.